Welcome to the Wyoming Women's Business Center's 2021 webinar series. Today's presentation is 7 options to access money for small business. I'm Christine Langley with the Wyoming Women's Business Center, and I'm going to be your speaker today. So some quick housekeeping. You're going to notice this Zoom webinar bar on the bottom or top of your screen, depending on your orientation there. And I want to just call quick attention to both the chat and the questions panel. If you want to communicate with me during this webinar, you can use either of those to send me a question or just make a comment. And immediately following this presentation, a survey is going to launch. And so I ask that everybody stay on the line to complete that survey because it does provide us, as well as our funding partners, with a lot of valuable information. So everybody that's on the line today is muted just to minimize background noise. And so once again, if you have any comments or questions during the presentation, just type them into those panels and I'll be sure to monitor those at the end. All right, so we're going to get started with some quick information about the Wyoming Women's Business Center, and then we'll dive into our topic today and then finish up with a Q&A. This is our 30-minute format, and so we appreciate everybody joining us today on what might be your lunch hour. This is being recorded, and it's going to be available on our YouTube channel by this afternoon. You can just go to youtube.com, search for Wyoming Women's Business Center. If you subscribe to that channel, you can check out all the other business education content that we've provided over the last several years. And then I also always send out a recording to anyone that registers for our webinars. So if for some reason you're interested in a webinar, but you can't attend at the time we host it, you can always register and then you'll receive a link to the recording. Or again, you can just go to the YouTube channel and search for it. All right, so the WWBC, for those of you that are new to us today, we are a standalone nonprofit organization. And our mission is to enable and empower Wyoming entrepreneurs. And of course, we have a special emphasis on women. So we do our work through 3 distinct programs. The first is our business counseling and training program. This webinar is an example of that, and it's always free. The second is our microloan program, where we offer loans from $500 up to $50,000. And that's specifically for small businesses in the state of Wyoming that have been denied from a traditional lending source. And then our third program is the Artist Development Center. And we run that in conjunction with our Works of Wyoming store that's located in downtown Laramie. But what I really want to get across to you is that we specialize in micro enterprises. And so what's a micro enterprise? Well, it's a business that has less than 6 employees. And the majority of those businesses are really 1 or 2 person businesses. These are businesses that we're able to launch for less than $35,000. That's kind of our sweet spot as far as our clients are concerned. So these are businesses like yoga studios and hairstylists, in-home daycare providers, marketing consultants, cleaning services, right? These are examples of our client base. All right, so let's jump into our topic today on accessing capital. Now, accessing funding is really a term that's used in economic development circles, and it's just a business term or language that means finding money for your business idea or for your business expansion. So it's probably the #1 question everyone that works in economic development gets is, how can I get money for my business? And I find that often the most truthful answer is not what most people want to hear. Right? So much so that sometimes I find a business owner gets referred to lots of different organizations in their community or around the state in search of money because no one wants to be the one to give them that honest answer. So I'm really not here to sugarcoat the truth. I'm here to educate business owners on the reality of funding. And so because if you go into your business understanding the reality and what your real options are, then I think it's a much faster path to success and it'll be a lot less frustrating. So before I dive into the various options, what I want to start with is I just want to kind of bust the #1 myth I hear over and over again. And it goes something like this. I'm a woman-owned business, or I'm a minority-owned business. Isn't there free money or government grant money available to help me start my business? Okay, another question kind of sounds something like this. My business is really going to help this community, So where can I apply for grants so that I can start my business? So I don't know where this myth comes from, but a lot of people seem to be under the impression that the government or foundations out there are interested in allocating dollars to private for-profit business owners. And all these business owners have to do is just find the resource and get their hands on the application so that they can get this money that essentially will be gifted to them and they never have to pay it back. And that's why they want to apply for this mythical grant. Now, there may be some small grants that are available. And when I say small, I mean less than $2,000 that might pay for specific products or items that are related to your business. But there are no federal grant government programs out there that are going to fund 100% of the startup costs for your for-profit small business. Like you want to start a bakery, right? There's no government grant for that. Grant dollars are typically reserved for nonprofit organizations, not for profit, right? And securing grant dollars, even as a nonprofit, is really competitive. And while some grant dollars might make sense for some businesses, remember that you're going to need to meet stringent requirements associated with that grant. So in conclusion, grant dollars are not a viable pathway for establishing and growing most for-profit businesses. All right, so now that we've busted that myth, let's talk about what your real options are for accessing money and actually starting or growing your business. And before I get into those, I'm just going to launch a quick poll so that I have a sense of who's on my line today. And can you just answer this quick question for me? I currently own or operate a small business in Wyoming. True or false? Just want to get a sense of how many people are in business and how many people are thinking about getting into business. All right, terrific. It looks like we're about 50-50 with the people that are on the call today. And this is normal, right? Some people are in the planning stages and they're trying to figure out what their options are. Other people are already in operation in their business and they have some growth plans that they're looking to fund and they want to know how to do that. All right, thank you so much. All right, so first step, the most viable possibility for the vast majority of small business owners is what I call bootstrapping. All right, what does that mean when people say bootstrapping? Well, it essentially means that you use your own money from either your savings to fund your business or from your existing cash flow in your personal life. Say you're working full-time and you have a partner that is working full-time and you don't need all of the money that you earn on a monthly basis and you can take the savings or the excess and drive that into your business. Or maybe you can borrow from a 401k. Of course, I never recommend people quit their day job until they have a clear path to profitability in their business and they can pay themselves some income. But there's lots of different resources or ideas that you can come up with in order to pull from savings that are within your own sphere, if that makes sense. All right, so bootstrapping. If this sounds hard, it's because it is, right? Business ownership can have really big rewards and therefore the barrier to entry can be really steep. Because if it were easy, then everybody would be doing it. So starting any business takes an enormous amount of effort and commitment, but most importantly, it requires risk. So I always remind my clients, you know, if they aren't willing to invest their own money in their business or their business idea, then why would anyone else, regardless of whether it's a friend or a family member or a banker, you know, or a private equity group, you know, whatever it might be, typically you have to be able and be willing to invest your own resources, and you are your first investor. So bootstrapping is always the number one way when it comes to small businesses. All right, what's a second option? Well, a second option is utilizing credit cards. And I will tell you a personal story here. My husband and I started our very first business back in November of 2000 by using our Citibank MasterCard. We purchased $7,000 worth of equipment to get started. I kept my day job to cover our minimum expenses. It was scary, it was super risky, but so is business ownership. So remember that credit cards give you a 30-day float where you don't have to pay interest. So in some cases, you may have some of the money or all of the money to pay off that debt within the 30-day float. Otherwise, you're going to want to look for low interest credit cards or utilize some balance transfer cards to keep that interest rate down. But I encourage you, do yourself a favor, be sure you read the fine print and understand all the credit card rules before you go this direction. And if you need help with that, reach out to us at the Wyoming Women's Business Center. We can always provide some resources that help you navigate that credit card game if that's what you're looking at doing. All right, so we've talked about the first two options, which are basically coming from your own resources. And so now let's move on to the next most viable option, which is what I call the friends and family bucket. Now, often when I ask clients if they have friends or family that could invest in their business, I'm immediately told that that's not an option. And sometimes that's true. But sometimes it really comes down to pride and not wanting to ask because you fear rejection. And honestly, we all want to be seen by our friends and family as doing it on our own, right? Or being successful on our own. And I'm here to tell you from experience that being a business owner requires you to get your ego in check. You're going to get no's a whole lot in your business. And the best place that you can identify money outside of your own resources for your business idea is with the people that know and care about you the most. So I recommend that you start with your friends and your family before you go seek funding from the other resources that we're going to talk about. And I recommend that you prepare your ask just as you would if you were going to a bank. And so that means having a well-developed business plan as well as financial projections. Now, this is also typically the part where clients tell me that they don't have time to write a business plan, or they don't know how to do financial projections, or they don't have a computer, or they don't know how to use Excel. All those things might be true, and some of them might be really legitimate, right? But it doesn't make the need for a business plan or financial projections any less real. So if you need help putting together a real business plan, and what I mean by real is a plan that actually explains how you're going to legitimately pull this off and be successful, not an academic assignment, right? It's actually a go-to plan that says, here's exactly how I'm going to pull this off. So if you need help with that, then I encourage you to reach out to us at the Women's Business Center and we'll step you through that process. We even have a self-guided online program that includes a business plan tool, a builder, that can help you write that business plan. And we can counsel you through developing financial projections. All right, so finally, if you're able to secure some funding from friends or family, then it's really important that you have that transaction documented using a promissory note and a payment schedule. There's templates that you can find online to help you draft a professional agreement. And depending on the dollar amount that we're talking about, it might be worthwhile to consult an attorney. Just because it's family doesn't mean they don't want their money back, right? There's a big difference between a gift and a loan. And it's important that everybody understands the terms up front, because you may want to go back to this same place for additional funding in the future. And so you want the experience to be positive on both sides. All right, next up is what I call crowdfunding. Now, this is a really interesting tool for raising capital or money for your business. Now, modern day crowdfunding started in 1997. And it was when a band actually sent out an email to their 1,000 person email list, letting them know that they were going to lose $60,000 if they went on tour. So they had done their financials and they'd figured out that they didn't have a profitable business, right? So the fans actually responded by saying that they should raise the money. So fast forward to 2007, 10 years later, with the launch of Indiegogo, and followed by that in 2009 was the launch of Kickstarter, and really the rest is history. So there's three different types of crowdfunding. The one most familiar to us is the donation-based crowdfunding, which doesn't actually make a whole lot of sense for a small business, right? Why would someone make a donation to your for-profit business? So that leads us to the next one, which is called reward-based crowdfunding, or peer-to-peer lending is the third. So if you'd like information on reward-based crowdfunding, you'll find a few webinars that we posted in the last year. And we even have a reward-based crowdfunding partnership with the local crowd here in Wyoming, where you can launch a campaign for free through the Women's Business Center. So reach out to us if you're interested in doing that. The last option is peer-to-peer lending. And it's similar to getting money from friends and family, but in this case, you just don't know the person. It's a negotiated loan between two people, and it can be an option for funding. Sometimes this is termed private money lending, right? Or peer-to-peer lending. Again, having a solid business plan and financial projections is going to be important in this type of structure. All right, next up is angel investors. So let's start by defining exactly who an angel investor is. So an angel investor is a high net worth individual. And that typically means that they have a net worth of over $1 million in highly liquid assets like cash or cash equivalents. Now, most angel investors are looking to invest usually under $1 million, and they primarily invest in businesses that are local or regional. They like to share their knowledge and be involved with the business, sometimes in a mentoring role. And they're really looking for an equity share, or sometimes they'll structure a loan. So angel investors are often associated with a group of investors where they pool their money together into a fund and then they lend together. So an example of this would be 10 different angel investors, right? 10 different individuals that are all willing to invest $200,000 each. Hey guys, I think I lost you for a second and now we're back. Can someone that is on the line with me right now throw in the chat and let me know where I lost you? Had we started with angel investors, or were we back on our most previous screen? Can anybody throw in the chat and just confirm that you can hear me right now? Okay, guys, I'm back. Can you hear me right now? Yes. Yes, sure can. Yes. Okay. Thanks for your patience. Apologize for that little technical difficulty. And I'm just gonna make sure we're there. Okay. All right. So I'm gonna start back at the top just to make sure that you guys heard about the angel investors. So the description of an angel investor: this is a person that has a net worth of over $1 million in highly liquid assets. Most angel investors are looking to invest under $1 million, and sometimes they will hook up with other angel investors and they'll create like a pool of money that they lend from. So if you present to an angel group or fund, Let's say you have an example here. Angel investors, they'll get together with a group of investors, they pool their money. 10 different angel investors maybe all contribute $200,000 to the pot, and they establish a fund where they can invest $2 million in various businesses. And so they will bring in different business owners to pitch this group of angel investors. And together, those angel investors will determine how much the fund wants to contribute to each business, and they'll write up the terms. So you have certain funds or angel investors that are dedicated to, say, early stage startup companies. But most angel investors want to invest once a company is already showing revenue. So while there may be some funds out there that are interested in early stage startups, most angel investors, again, they're high net worth individuals, but that doesn't mean they're billionaires, right? They're millionaires, and they expect to get a return on their investment. So they may be a bit more cautious in who they invest in. Therefore, they want to see a company that's already showing revenue, that is already on the rise to profitability, and just needs a little bit of cash or a little more fuel in order to really make things explode for them. So angel investors are looking for a solid return on their money when they lend. And so again, they're going to prefer to invest in companies that are already showing promise. Now, most micro enterprises, which are the types of clients that I work with at the Women's Business Center, they're not going to be valued at a high enough level that interests an angel investor. So if you've ever watched Shark Tank on TV, this is an example of angel investing. Right? The investment opportunity is typically under $200,000, and the sharks are looking for really favorable terms. So I always give Shark Tank as an example because it's the best example of what angel investing can look like. Okay, so we talked about angels. So now we have to talk about venture capital, VC money. It's similar to angel investing, but you can just add some zeros. So these people or funds that are created, they're looking for larger investments, and they're very comfortable with risk because they're looking for major returns and a major equity position. Again, micro enterprises don't really qualify as a prospect for venture capital money. And the reality is that less than 1% of all businesses that apply for VC money annually actually get funded. So I know it's fun to read about in Inc. magazine, but for most of us, venture capital is just not a viable option for our business. Not saying that it never happens, just saying that it's a rarity, especially for a micro enterprise. Okay, so I'm going to finish up today talking about bank loans. There's lots of options when it comes to bank loans, but just like all my other examples, besides bootstrapping and credit cards, they all are going to require a strong business plan and financial projections. So start with those documents before approaching any lender. Most of us have a bank that we use for our personal life, and that can certainly be a place to start. But you should understand that banks are risk adverse. So they're often going to steer you towards something that has less risk for them, right? Something like a home equity line of credit if you're a homeowner, or they're going to ask for a personal guarantee, or they're going to ask for collateral to secure a business loan. And it's important that you understand what you're agreeing to before you sign anything. So reach out to us with any questions, and we can help you get prepared for your banker. And we can also help prepare you with questions to ask your banker. So if a traditional bank happens to deny your request, then there might be a lending opportunity through us and through our microloan program. But again, we're a lender, and we're going to require a business plan and financial projections as well. That's typically where we all start with clients. Okay, so I would be remiss if I didn't mention some special programs that are offered by partners of ours within economic development across the state. So there might be some opportunities in your local area for startup competitions that offer prize money. And there's also some small business grants through the Wyoming Business Council, or maybe even through a local economic development agency, or even a chamber, right? So I always recommend that you reach out to your local chamber or a regional director at the Wyoming Business Council to really understand what their programs are. Now, none of these options are going to fund the entire startup of your business, but sometimes, those small amounts of money can help you get some momentum. And so it can be a positive thing, especially if it comes with some business advising or counseling, like the startup competitions that are run by some of the incubators or accelerators across the state. All right, guys, thanks for sticking with me through my technical difficulties here. Do we have any questions? I know some of you are in the planning and startup stage, and some of you are already operating and in business. I'd like to know, did you get what you were looking for out of this webinar today? Is there any information that you'd like me to go deeper on to explain some of the different options? We've got a few minutes remaining. So I'll let you type those into the chat or the questions panel as I go through a couple of additional slides. So if you're interested in working with us one-on-one, you can always become a Wyoming Women's Business Center client by going to the wyomingwomen.org website, and right there on the homepage, you can just click the button that says sign up now. This is a screenshot, so if you're clicking it, it's not working. But if you go to our website and you click on the sign up now button, it takes you to a free application, and you can complete that application, and then we will reach out to you for a one-on-one counseling session where we can answer questions more in depth. It's free to become a client. You get access to all kinds of great resources. So I encourage you to do that as a business owner or as someone that's planning to be a business owner. It never hurts to have additional support in your corner. So we've completed the 7 options to access money for your small business today. The next webinar coming up is called Artist Insights, Building Your Shop Small campaign. And then I will close out the month with a Ready to Start a Business webinar on October 26th. If you're interested in any of those upcoming trainings, again, go to our website, click on the training tab. You can always register for free to come to any of these webinars. All right, our funding partners. Our primary funding comes from the SBA, Small Business Administration, with a matching grant from the Wyoming Business Council. And so all of our funders are important to us. Obviously, they help us do our work at the Women's Business Center, and without them, we would not exist and be able to offer all these free resources. So we appreciate them and look forward to the work ahead. Okay, guys, I'm checking my chat and my Q&A, and it doesn't look like I've got anything. So hopefully I answered the questions that you came for today. I'd appreciate it if you stay on the line and just complete our closing survey. I do read every single one, and it helps us with our educational programming going forward. So hope everybody has a great week, and we'll see you next time. Thanks, bye-bye.